I'm Justin Birnbaum, a staff writer at Forbes. Joining me today is António Caçorino, the CEO and co-founder of Apex. Antonio, thanks for being here today.
Thank you very much. It's a true honor.
So Apex was founded 5 years ago. You have over 100 athletes invested with you guys. You also are invested in a slew of sports properties like the Alpine F1 team, Venezia FC in Italy, Bay City Golf Club, Tomorrow Sports, Baller League. Walk me through things here. What is the strategy? How did you guys kind of get started, and what are you trying to accomplish?
Yeah, it's what you're saying. The origin is exactly on a very unique athlete community that we thought we could build, and getting them together to invest in sports. Today we are a sports investment manager like many others. We have definitely our kind of DNA and a couple of things that make us different, and athletes are one of them. They are active LPs in our network that contribute beyond their money and their commercial value in our investments. They bring their network, they bring their industry insights. And I think that broad community of athletes gives us quite a different way of looking at sports, of diligencing opportunities and adding value once we invest. Our European roots make us different as well. I would say most of the kind of leading sports investors out there are US based, even if they globally deploy. We are rooted out of Europe, and I think that makes us quite different, particularly once investing and deploying in Europe, but also having a kind of an international set of eyes when we look at the US. And I think thirdly, the fact that we're really born out of the sports industry. So we're not an investment management business that was doing other sectors and then kind of decided to focus in sports. We were born to deploy in sports. And I think that kind of genesis is also quite different comparing to others out there.
Amid all these sports properties, you operate in both venture and also on the private equity side. I'm curious kind of if you could explain the delineation between those two. How do both sides of those strategies work?
So we first started on the venture side.
Yeah.
Our first set of investors were the athletes themselves. So that was really what I wanted to prove, that we could bring the athletes along and they could invest with us. Obviously, for the fact that we were working only with athletes, the ticket sizes were a bit on the smaller side, so it just made sense to look at the early stage opportunities, smaller tickets, but where we could also be relevant in the cap tables and add value from the beginning.
Yeah.
So we started to look at sports venture, sports tech, and it was also, we were privileged with timing, so it was really also when kind of the private equity movement began, and definitely you started to have different kind of ownership at sports properties. So obviously sports tech and innovation in sports is fundamental for those properties to be run efficiently and just better as a whole. So that also really gave much more, a bigger opportunity to focus in the venture side. So that's what we decided to do. And then obviously growing the type of investors and the capital under management, and just we started to look at the growth in private equity side of things as well, and started to look at teams, leagues, IP, commercial rights, etc. Now, today, one thing that I really like, and again, it also makes us different, is the fact that we have both the venture and kind of the growth in private equity arms, and how those two coexist. At the end of the day, having one of the strongest sports VC funds out there makes us a better investor on the private equity side, because every time we're looking at something, we can definitely bring in that technology, that innovation, that enhancing how we add value. And the same way that we can always bring bigger clients to our sports tech businesses, right? So when we find a founder that we like, that has a good idea, that is, has developed a nice product, but they want to roll it out in the sports industry, then obviously we can bring that network. And if we're invested, then obviously that makes it even easier. So that ecosystem works really, really nicely together.
So you mentioned obviously like dealing with athletes and starting out kind of more on kind of the early stage side, smaller tickets. What do the tickets generally sit at now? What's the investment size? What kind of timelines do you look at? Because obviously if you're investing in sports teams, it's a much different timeline than you can normally operate on, whether it's venture or private equity. But curious, investment size, timeline, returns, what are you guys targeting overall?
So actually, when it comes to times, I would say we look at it quite similarly. So both our funds have a 10-year horizon. I think sports needs time. I think it's a mistake to have the pressure to kind of want to exit a little bit earlier than you should. I think the industry as a whole is still very, very nascent when it comes to institutional capital professionalization around investors. So we look at it actually quite similarly. Obviously, then in terms of ticket sizes, it's completely different. So our venture fund, We normally invest 1 to 2 million, so it's really early stage, so seed and Series A, where we target around 5% to 10% ownership of the businesses. On the growth private equity side, we'll invest anything from 10 up to 50 million. And there we're targeting, I would say that the core focus there is strategic minorities, so anything from 20 to 45%. Where we obviously have the right governance to add value on the commercial side, on the business side, on the media side potentially, but not necessarily run the day-to-day.
We're in the age of the athlete investor. So you think about, like, for example, like you guys working with athletes. It's not uncommon in the sense that athletes want to find different ways to deploy their capital. They earn so much these days. They want to make their money go to work for them. I'm curious, having this giant community of athletes, you've shown demonstrated success in terms of bringing them in and also kind of adding nuance to the table. What specifically do you bring the athlete investor? Why are they so interested and gravitating to you so much?
I think the fact that we're not providing them a service, the fact that we're not a wealth manager, a financial advisor, makes us a little bit different. At the end of the day, what we're telling them is we're sports GP, and they should be, if they want to invest actively, be our LP. So they should invest in the industry that they understand, right? So I think what the athlete today wants, especially the modern athlete that has probably already an agent that deals with his or her career, then has potentially a commercial agent that deals with kind of the commercial side of things and monetizes their brand and their IP. And then there's always the financial advisor that kind of takes the big bulk of with their wealth and kind of deploys it. So obviously once they retire, they'll not have financial problems. But there's that kind of a new element, which is, okay, what can I do with my money as an investor? Putting your money with your financial advisor doesn't make you an investor. It makes you made a smart decision to obviously do that, so you're preserving your wealth and potentially generating a little bit out of it. But at the end of the day, you're not becoming an investor. So if you want to become an investor, you should do it in a sector that from day one you add value with network and with the industry insights. And that's what they can do in sports. So it's basically telling them that. And we mostly only work with athletes that really have already decided on their own that they want to be involved, right? Yeah. So if they do that, just our proposition to them makes sense. We work with them eye to eye. So again, we're GPs, they're LPs. We're in this together. And I think that model just works really, really nicely. And obviously by being also first mover and doing that, particularly out of Europe and attracting the best European athletes, and obviously then also that made the right base to attract the almost 200 athletes that we work with today.
What's the other side of that coin there? Obviously, having so many athletes is kind of a unique market advantage. Does that open up new opportunities? Does that get you into different doors? I mean, what's the strategic value that they actually bring back to you?
Yeah, I think it's really an eye to eye in terms of what they give and what we give. They obviously unlock a lot of access, right? Just the fact that they know that they are our LPs, that they're close to us, that we can bring them on board or anything, attracts a lot of companies to Apex. I think one kind of unique thing is really being close with them. So what we don't have beyond just their money is really them. We're close. We're one call away to getting their industry insights and their opinion on something. Yeah. I think that is so valuable. So when we're looking at a new sport, for example, we can definitely speak to athletes that are either part of that sport or know of that sport, and they can give us their opinion, what makes sense, doesn't make sense. So that transfer of knowledge that they give us is quite unique. And I think that's even what they most appreciate, is feeling that we appreciate their knowledge beyond anything else. And that's different than what they're getting on their day-to-day, right? Obviously, a Formula One driver, he doesn't need you to tell you he's a good driver. Yeah. He doesn't need you to tell you that he's got money. He doesn't need you to tell you that his image is worth a cool sponsorship deal. They'll know that mostly. Yeah. But if you're going to tell them that his knowledge of something is going to be useful to a company that will grow, that is quite different to them, and they appreciate it.
I'm glad you mentioned F1 though, because you have a number of F1 drivers who are invested with you guys. Lando Norris, Carlos Sainz, if you count, the Cadillac coming to the grid, Valtteri Bottas. I'm curious why you guys have gravitated, why F1 drivers have come to you guys so much. Why have you been able to kind of take over the grid, for lack of a better term there?
I think that goes down to our foundation. So two of our early athlete kind of partners that believed in us from day one are drivers themselves. Yeah. They're both some of the best Formula E drivers in the world, but at the end of the world, the racing world is very small. So everyone grows up in the same kind of grassroots route. So we knew that through them we would be close to that ourselves. So the other partners and founders of Apex, we were also born in that world, just at a personal level. So we knew a little bit of these drivers as well, and we saw that F1 was definitely a sport that was on the growth. So if we would be able to get these guys from the beginning, that would be really kind of a statement. And it's a tough world to crack. Once you're in, you're in. It's super small. There's only 20 drivers. So we knew that was a clear focus. So yeah, that's why today, you mentioned a few, but more than half the grid has done deals with us, has invested in our fund, and just close to us.
Tangentially, you also brought Red Bull's investment arm into your fund. Obviously not like literally the racing team, but the fact that you're in that broader Red Bull ecosystem. I'm curious, how did that deal come together? What does that do for you long term? Like, what opportunities does that open?
So that deal came together through just being in the same world. The sports world is actually much smaller than people would think, particularly when it comes to investing. Yeah. We always knew that we would have to go beyond athletes to scale on a capital standpoint, right? And I think what we knew would be that the next step beyond athletes would be a couple of family offices, a couple of high net worth individuals, but also some very interesting strategics within sports that saw our value beyond the fact that we're still a young investment business, but they really could validate our strategical value. It's much easier for Red Bull to validate that than maybe a huge fund of funds that doesn't know much about sports. So we knew that there were a few of these that we could target. Obviously, Red Bull would be was the name that we most we would always idealize, and the fact that it became true, it's incredible, and we're super happy. But Red Bull is a brand that has demonstrated, and it's a business at the end of the day that has always seen sports as a fundamental kind of sector for them to grow as a business. They've invested directly in sport, and they own teams and operate teams, in various different sports, as we all know. But they had never done kind of venture investing. So they also were very kind of humble to know what they know and what they don't know, and the venture space is something that they hadn't done, but something that they definitely see that they need to be closer, not only as an investment opportunity, but also to integrate within the broader ecosystem of Red Bull. So they set up this 200 million kind of venture, corporate venture arm, let's say, to basically bring in all this technology innovation within the ecosystem, and as any smart corporate venture should do, their first investments is directly into funds and experts within that venture space, and obviously they identified Apex as their expert in sports, which for us again is a huge honor.
I thought for a moment you were going to say, like any smart company would do, invest through us, but let's broaden things out for a moment. Your sports investors, the industry has never been hotter. Just as an example, the 124 teams in NFL, NBA, NHL, and MLB collectively worth more than $450 billion. I mentioned those because Forbes has tracked those for 27 years. And over those 27 years, the average team in those leagues has gone up about 1,800%, which is an astonishing figure. What that makes me think is sports values have climbed so high. From your perspective, as someone who's buying in and kind of trying to continue to get returns, is there room to keep going? Are you going to still be able to get these market-beating returns going forward? Is the space going to stay as hot, and are we going to see this much growth going forward?
When it comes to, let's say the big four, as you mentioned, obviously we'll not be seeing that level of growth, right? Yeah. But I think it will continue to grow. I think that the fact, all the macro trends are positive towards more people consuming sports, more people practicing sports. Obviously, there's a lot of questions around how that's going to be done, how people will participate, how people will consume. But at the end of the day, the trends are favorable for the growth of sports, and I think those that that are established as within the big four and that have also a franchise element to it will keep growing, but obviously not at the growth rates that we've seen, because that's also just natural. But at the same time, I think kind of the risk of these assets or these franchises kind of go down will also decrease. So I think it will just be perceived as a different kind of investment, not a growth equity, more private equity-like. That's why now you see a lot of private equity investors looking at NFL teams. And maybe 5 years ago, it was mostly kind of family offices. Even if you couldn't, private equities wouldn't. So now there's always an element of risk which has reduced, but also kind of that growth that we saw, particularly looking at F1, kind of 10 times in the last 10 years. Obviously, that won't continue going.
Yeah, yeah. I'm going to circle back on F1 in a moment, but to your point, private equity and institutional capital coming into sports, especially in North America, not something we've traditionally seen. So I'm curious, when you bring in this large-scale institutional money, these big private equity outfits who can, come in and make these minority investments at such a large scale, what opportunities does that unlock? How does that change the economics of it, especially, as a fund like you guys operating in there too?
For us, the first thing that we see, obviously, it's an institutional validation of a sector that we've been, bullish on and kind of selling on to a lot of our investors, right? So I think that's the first thing. I think what these institutional investors are seeing is that there's, investing into sports franchises is actually investing as well into massive IP, into going beyond sports into entertainment, into health, into wellness, into community. And I think at the end of the day, that is something that every investor is looking for, because that brings stickiness to the investor. Sports is the only, or one of the few kind of sectors, only is obviously not right, but one of the few sectors that can truly say that is uncorrelated to public markets, right? And I think that is something that brings, particularly to institutional investors that sometimes, invest in kind of 5, 7, 8, 10-year horizons, they need to kind of tell them. And I think in a moment where we're seeing a lot of geopolitical instability, I think sports shows that resilience as an asset class as a whole, and that obviously is very attractive to institutional investors.
So back on F1, okay, when we put out our valuations in 2023, the average F1 team was worth $1.88 billion, which was 276% up from 2019 when we had teams at an average of $500 million. I mean, obviously, with the way stakes are changing hands now, like values are going up, things are going higher and higher and higher. I'm curious kind of what your expectation is for those teams to appreciate going forward, because this is kind of a little bit of a different case study than what's been going on in North American sports. The changes in Formula One are a little more sudden with the way the business model has evolved. So what do you see there?
I think one of the main reasons why we saw this crazy growth was obviously, in the last 5 years, we went from nobody really knowing much around how an F1 team operated and what is really F1 to now there being a massive amount of investors wanting to buy in, and obviously there's a huge scarcity element. So obviously that's just market dynamics. Now, if you look at the business models, if you look at just actually the revenues, the teams are going up steadily. Obviously not at the pace that we saw, franchise values and valuations going up, but we do see definitely, you see a lot of these, the big teams almost around 1 billion in revenues, many of them 10 to 20% profitability ratios. I mean, that's a real number, that's a real business. Yeah. So I think at the end of the day, that will keep going. And I think suddenly, the kind of the boom and that over demand for F1 teams will go down. One, because I think the hype will reduce a bit. Two, because I think a lot of the teams will also realize, a lot of the investors will realize that it's not so easy to actually invest. And once you're in, actually add value. It's still, you still need to understand sports. It's not just something they're buying in and have to passively wait. I think that those kind of investors are not ready for F1 yet. So I think that will reduce that hype. And at the end of the day, then the valuations will keep going up just because revenue streams will increase and revenue numbers will keep increasing and a lot of the teams will keep going profitable. I mean, at the end of the day, the majority of the teams, if not all of them, return money.
So when you talk about like many sports leagues, the revenue streams are dominated by media rights in a lot of cases. Like just take the NFL or the NBA, for example. Billions and billions of dollars on predictable media rights, and that's kind of what underpins a lot of this valuation growth. What streams are you most bullish on in F1 and kind of underpinning their growth going forward? Is media rights kind of the thing we should all be circling? Is it, just sponsorship? Like where do we look at Formula One and see growth coming down the pipe?
I think a bit of everything. Obviously, media rights is the big one, especially for the big leagues. The big four, the Premier League. It's the holy grail, and whoever can also kind of know where these media rights are going to go. And obviously, you'll know the future of sports, and everyone should follow that. It's hard to like I said, eyeballs will keep going up. I believe. I believe that F1 will keep growing into new demographics, touching more women, touching younger people, touching new geographies. But it's not an obvious translation that will result into more media rights because you're not sure where they're going to go. Is it going to be streaming? Is it going to be on pay TV? Is the traditional routes going to stay or not? I mean, that's the big question broadly that NFL would love to know, that European football would love to know, that Formula One would love to know. I think on the sponsorship side, that's something that definitely we see at a different pace, but consistently increasing, and we're very bullish on. There's obviously then new revenue streams that can be unlocked. In terms of how you engage with different audiences, that cannot maybe go to the track, and I think that's still all early days, and we see that a lot through our venture fund. A lot of very cool ideas out there in how to monetize better the fan and the experience, but I mean that's still early days. But I do believe that will go from being a nice to have to a real revenue stream to the Formula One.
Looking here in the U.S., kind of the addition of the Vegas race, I'm curious what you thought that did to the calendar and how kind of that brought things forward.
Calendar is always, it's always tough to change because everything needs to make sense. There's the media rights that play in it. There's also the drivers and where they're going to go. You want them traveling back and forth. So obviously trying to force something in. Is always a challenge. You see it with other sports like tennis. I mean, how complicated is it when you're looking at a tournament or something? It goes down to calendar, and it can be the big reason why an investment makes sense or doesn't make sense. But I think, obviously, with Liberty owning Formula One and taking that promoter risk, which they did with Vegas, I think just allowed them to be able to take that risk. I mean, at the end of the day, Vegas is the capital of entertainment, and Formula One is becoming an entertainment business, so it just made sense as a whole. Obviously, year one of Vegas is a worse experience than it is going to be this year, and going forward, you improve, you adapt, you learn, and there was some cultural resistance. The track isn't the most exciting track for a driver, but then at the end of the day, what is driving eyeballs to Formula One? Is it the racing product, or is it everything around it? It's more everything around it, and that's, I think, obviously the idea of having a race in Vegas does.
So Apex is invested in the Alpine F1 team. I'm curious, walk me through that opportunity. Why did it make sense for you guys? What were you seeing there, and kind of what you're aiming to get out of it?
The first thing that we saw is we still believed that there was, that level of growth curve was still to be captured. Yeah. This was 23. Obviously, the first wave was there, but we still believed there was going to be an element of that. So I think just tapping into that wave made sense for us. Obviously, us being so born out of motorsports, obviously it made sense for us to be in Formula One. We knew we could drive a lot of value into a Formula One team. We knew we could help with a lot of the elements also around politics. So we knew we could be just a very strategic partner in that deal. And we knew that in 5 years we were very confident that valuations were going to keep increasing. So I think that was a simple base around the opportunity that made us comfortable in investing. But then also we came in the deal with Otro, who was an American investment fund spin-off of Redbird that structured a very good deal, which I think was very good for Renault, also very good for the investors. So everything just kind of made sense together, and then we knew that if we were able to bring some very great athletes as well into the mix, like Anthony Joshua or Rory or Zverev, just a group of Trent Arnold, the Real Madrid English fullback, it would add also the athlete DNA, the Apex DNA into the deal, which would make it also a special one.
Where do you feel that they fit in the grid in terms of ranking the valuations? Are they a middle of the pack team? And also, do you see them kind of as a team that can grow out of that kind of tiers? Because valuations generally operate in tiers, and I'm curious where they fall for you in the hierarchy and how high you think they can go.
So Alpine is Renault team, right? Renault is a team that has won 2 world championships with Alonso in the early 2000s. It's a team that has a lot of F1 heritage, and I think that is fundamental for a team, and if you have that, you can never be considered in the lower tier. Now, as we all know, it's not hard. We can just look at the championship standing this year. The engine has been tough, and obviously the performance has been struggling. So obviously that doesn't help, and there is a huge element of performance that needs to be there for you to be considered within the top tiers. But if you look at the history of Formula One, Renault is definitely I would say not a tier 1 but a tier 2 team that's could compete with the Aston Martins of today, and that's where the team should be. But obviously, it's also not where things are today. So we're also realistic. So I would say, we'll be in terms of valuations, sitting nicely in the middle.
Yeah.
But again, at the end of the day, it goes down to heritage, to infrastructure, to IP, and I think with those three elements, obviously, Alpine stands in a good position.
Obviously, nothing can go up forever, right? I know people throw around the term, are we in a valuations bubble, are we in a media rights bubble? It seems like whenever that starts getting thrown around, there's a new team sale, like the Lakers sell for $10 billion, or there's a new media rights deal. Do you see us as approaching kind of a ceiling to valuations? And also, how do you evaluate as an investor when is the right time to get out?
I agree in the sense that things don't always go up. Is it a bubble? It's hard for me to say. I mean, I don't know the answer to that question, to be fair. It's also not where we deploy. Again, we're not a large cap investor. We're not going to be investing in an NFL team anytime soon. So it's also not kind of where we are focusing our time in understanding really what would we be underwriting if we would be investing into an NFL franchise today, and are they going to keep going up? I think they'll keep going up for a bit. Obviously, again, growth rates will go down, but it will go down to, let's follow the revenues and let's follow the money in that sense. And if revenues keep going up, then potentially valuations will keep going up. But that's not where we'll focus again. We prefer to look at the sort of small mid cap. That's where we feel there's the best opportunity to invest. That's what we know better. And there, in terms of exits, we're very confident that if we do the right job in buying into a couple of these businesses and helping them grow potentially into becoming a large cap, then obviously I think selling a business that is cash flow positive and considered a large cap, there's a bunch of investors full of capital ready to buy us out.
From the investor perspective, how do you see F1 continue to grow in terms of fans and popularity? You had Drive to Survive that kind of got it into a popularity phenomenon here. You have these races in these new markets like we discussed. How do you keep adding fans if you're F1?
I think if you ask F1 and if you have Liberty today, I think they're not necessarily. I think they've done a great job in unlocking a lot of new fans. You can keep doing it, as any big sport still does. But I think they've showed that F1 can be appealing to every kind of person and fan in the world, be it women, men, be it younger people, older people, from the Middle East, Europe, Asia. So there's potentially a couple regions where they can unlock a bit more. But at the end of the day, what I think where the growth will be is then how to monetize better these new fans. Some of the fans might be watching but might not be, kind of getting the experience that they want, might not be, spending the amount of money that they would be willing to if the product would be adjusted in that sense. So I think they are more concerned today. Liberty and Formula One as a business, I think, is more concerned in how to find new ways to give a better experience and then monetize better. Already they're huge global fans and they're potentially just growing. I think there is ways to grow, but they've done a great job already in, like I said, making Formula One a truly global business.
From the Apex perspective, what sports are you most bullish on going forward? What sports, leagues, teams, where do you want to go in the future?
So there's a lot to answer that question. I think we're very bullish women's sports. I mean, everyone talks about women's sports today, but I think looking at leagues in particular is something that we're very keen. I think there's tons of opportunities on the commercial side of women's sports, so really understanding where how brands are looking at women's sports, and we really are very bullish around kind of the commercial rights of women's businesses and sports going up. So we're very bullish that we're very bullish a lot of this kind of emerging leagues, emerging IP, as we did with Tomorrow Sports, bring a new kind of media product into golf, as we saw with Baller League. That's that kind of investment, not within a particular sport, but broadly disruptive concept around certain traditional sports is something that we are very keen on. And then in particular, tennis, we think, is in an exciting moment. So the same way that golf a couple of years ago was, and you saw a lot of things happening, we're feeling the same kind of movements. There's going to be a lot of good ways to lose money in tennis, but for sure now we feel that there's potentially some opportunities to also invest directly in the sport, which maybe 5 years ago we wouldn't be so certain.
Antonio, thanks for being here with us today.
Thank you very much.